What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. I want to give a huge shout out to HashPack. I was thinking about this morning. I don't even know how many podcasts we've done in collaboration and sponsored by HashPack at this point in time, but it is definitely in the hundreds. We have Phil with us today from HashPack, but we have a really good show. We're going to be talking to SilkSuite, Next Gen DeFi on Hedera and beyond, Tashi, so real world application infrastructure. And then we're going to close out with YieldFX for global yields and tokenized foreign currency on Hedera as well. That being said, we're going to run a tight ship this morning. So I have this the SilkSuite crew with us today. Who wants to kick us off here? And let me preface this whole show, not financial advice. I'm not a financial advisor. Certainly you need to reach out to somebody that's smarter than me and maybe smarter than the panel that we have all throughout today to talk about what you should do with your financial investments. That being said, Permable, Houdini, and Fatboy, welcome up to the stage for SilkSuite. Give us an overview of what SilkSuite is for those of the people in the audience that may not know.
Good morning. I hope you're well, Solomon. I hope everyone is well that's listening. SilkSuite is a decentralized exchange platform, but it's a bit more than that. We have a 0% slippage DEX. We have coming in a month or two an NFT DEX, which is an innovation. We have a launchpad, which is available to launch NFTs and fungible tokens. We have a cross-chain DEX where you can send tokens, for example, from MetaMask to Phantom, HBAR to Solana, and so on and so forth. In terms of our technology, we are not built on smart contracts. We are actually built on smart nodes, which utilize Hedera's native layer. So we have atomic swaps, cheaper, faster, so on and so forth. Our main vision for SilkSuite is rewarding and gamifying DeFi, and providing some sort of incentive to actually use the Hedera network. Why did we choose Hedera, for example? Well, technology, it's fast, and we know it's the future, and that's why there's the governing council members, and as well as the ETF. So it's a very easy choice of why Hedera, the tech. And if we want to go a bit further, community is amazing. We have one of the most engaging communities on X, which is the most important thing.
100%. I know you kind of broadly mentioned the NFT DEX that's coming out. That was really interesting to me. So for those that aren't aware, one of the big problems with, well, not just NFTs, but a lot of things in crypto is that after the initial kind of romantic period dies off, it's hard to kind of keep some of these things afloat. And you guys had really interesting ideas around like liquidity pathfinding for NFTs, which I thought was really cool. What are some of, I guess, broadly the issues that you see? Whoever wants to take this, not only just kind of generally in crypto, but even in particular on Hedera, that you feel like you guys are going to kind of be solving for?
I'll explain this in my simple way, and then maybe Houdini can jump in terms of the technical way. In my opinion, NFTs are basically meme coins, but illiquid. Same type of communities, but one's only a picture, one's an asset, which is liquid and tradable. With the NFT DEX, essentially it just liquefies the NFT completely, instead of like Ethereum 404 protocol, which fractionalizes the NFTs. Our technology allows us to completely liquefy it and turn it into a tradable asset. So very simply, you go on an exchange and you can buy and sell 3, 4, 5, 6 different ghost NFTs in an instant, as if you're trading any kind of meme token. Houdini, if you want to jump in.
Yeah, no, that's accurate. Good morning, everybody. Thanks for having us, by the way. So yeah, when you have, we think of swapping tokens, meme coins, whatever, you swap in pools. There's two sides to that pool. One is the layer one or some other, asset value token. And then the other side of the pool is your meme coin. And when you swap it, when you buy the meme coin, you're putting more of that layer one coin in, and the price of the meme coin's going up. When you sell the meme coin, the opposite happens. You're taking some of the layer one value out, and the price goes down. Well, because of the way Silk works with smart nodes and the HSuite technology, the DEX really works based on tokens, right? And on Hedera and the atomic layer especially, a meme coin is a token, an NFT is a token, right? They have different max available. Usually meme coins have several million. NFTs could have 100 to 10,000. But essentially, we're just pairing the NFT tokens, serialized coins, basically, pairing those with an asset token, which allows the user to swap the NFT like it's a token. We think of it as buying and selling when we talk about NFTs, but when the NFTs are in a liquidity pool and paired, you can just buy and sell, swap between the pool. And if you buy an NFT from the pool, price go up, sell an NFT from the pool, price go down. And with the new version of the NFT DEX, we have individual curves that the founders of the pool can provide, so they can control the value of different traits, different rarities. That was in the initial rollout of the NFT DEX. One of the limitations was there was a single bonding curve, if you will, applied to the whole collection, right? So it wasn't granular enough to segregate the rarities and make those sort of different values happen.
I think I want to get Fatboy up here too, because I know, and congrats, I know you're kind of taking on some different roles throughout this space, and certainly helping out the SilkSuite crew too. And you've been one of the individuals that I think it's so important to kind of get outside of the comfort zone and get outside of the echo chamber and figure out what's going on across all of crypto to really contribute value in an ecosystem or with a project that you care about. I think it's important to learn what other people are doing to be able to best contribute to something you care about. And Fatboy, I would love if you could talk about what your kind of role is, and I know that the whole kind of purpose here is you guys have a lot of big milestones coming up soon. Let's focus on that as we kind of move forward here. But thank you, Fatboy, for joining too.
Yeah, absolutely. Appreciate you guys having us on. Good morning. It's afternoon here for me, but I know it's morning time for some of you guys, and I think even late evening for Permabill. But yeah, I mean, you guys know me. I used to run a lot of spaces on Hedera, but then decided I wanted to take a break and yeah, head out. And so I worked with projects on Ethereum, mainly Ethereum and Solana. Solana obviously being one of the place with the most volume and the most projects being launched, whether it's through Pump Fund or whatnot. So yeah, I've managed to speak with a lot of different communities, a lot of different devs, and yeah, I think it's good. Like you said, it's good to get out there and to see what else is going on. I think that's for Solana people as well. I mean, we've seen it, the forever mint that's been happening with NFTs here on Hedera. We're now seeing that on Solana. Magic Eden has decided they're going to implement the same thing. So we've got a smaller ecosystem that's came up with a really good idea, and the one who's basically the Goliath, the 1,000-pound gorilla in the room, have said, hey, that's a good idea, we're going to do that. So yeah, I think it's the best. I don't think it's a good idea to be a chain maxi. I think you should be someone who wants to be innovative and who wants to make money, who wants to be part of crypto. It's not just Hedera, it's not just Solana, but it's crypto, and it's Web3. So we're able to take ideas and throw them around. I think the NFT DEX is one of those things we're going to add on to this forever mint on Hedera. It's something else that we can now add to the toolbox for NFTs. So it's now not just a picture that sits in your wallet and you sit in a Discord hanging out with your friends. Now you could do something else with it. So yeah, I look forward to working with SilkSuite. I think we've got some really good ideas, and we're going to try and bring what I've learned and what everybody's learned really from, because I know we're all from cross-chain. You're always looking at stuff. So yeah, I look forward to implementing a lot of that.
I miss joining Fatboy's spaces because every time he would sarcastically play
the sad horn,
play like a king entering. It was like hilarious.
It was crazy. Yeah,
But
shout out to you, Fat Boy, man. Yeah, it was good.
Yeah.
Those 2 years that you ran the table talks, man. I think it was with the ruler. That was absolutely awesome. You were one of the first actually to bring eyes like cross ecosystem like what it was. Yeah, that was awesome, man.
yeah,
I appreciate that, guys. Yeah.
so I think it's important too, because I think one of the things that, you know, drives a healthy ecosystem and drives adoption of any ecosystem, and Hedera certainly included, is competition. I think if you only have a select number of options, it really, I guess, in a way, fortifies like complacency, I guess, in a way where if there's
Yeah.
only a couple of options doing something, then what's the incentive to innovate and compete, because there's no competition. So I think I'm interested in seeing you guys kind of roll out all this stuff, just because one of the reasons is I think it's going to drive, you know, actual competition on the network from the DeFi and the DEX standpoint, which I think is healthy, and I would like to see tons more of this. So
Yeah.
what's coming up next for you guys? I know you guys you just did the rebrand a couple of months ago. We had you on, but what is like in the immediate future that people should kind of watch? I think Q4 is a big year for SilkSuite.
I'll kind of get into what we're going to do, and then Houdini will get a bit deeper into it. Long story short, we delayed our native DEX token for a year and a bit. We didn't launch with a native DEX token. We wanted to go self-funded. It wasn't a great time to launch a token. We didn't want to sell anything and maybe people lose money. We wanted to do it right, even though it was going to be very hard. So fast forward a year and a half now, we have been speaking with a lot of people. We've been preparing liquidity. We're trying to go for a massive token launch, but more focused on liquidity and marketing, and not just normal marketing, not just marketing on Hedera, but we're trying to go further out and market Web3. For example, the latest DEX token that launched, an actual DEX, Asta, they didn't market just on BNB, they marketed everywhere. And that onboarded people to BNB chain. And we saw what happened with Asta's token. That's essentially what every project should be doing to maximize users and inflow and liquidity coming into the chain. Our focus is to bring more people onto Hedera, more onboarding, more liquidity. And with our token, that's essentially what we're going to go for. And Houdini can get into the real details of the token that we're going to launch.
Yeah, absolutely. Well said, Perma. Just a quick throwback, because I think it's relevant to what's going to happen. The state of DeFi, state of HBAR DeFi. And just like you said, Solomon, we need more competition in the space, right? Hedera has a great provider, one great provider for each tool set, right? We have Saucer Swap, the big DEX. We've got Centex, the big NFT marketplace, but it's really isolated to one provider still. But they're great; they've grown well. What a healthy DeFi space needs is competition to drive innovation, like you said, but also competition to give the trader margins, arbitrage opportunities between different value sets, whether it's pools, whether it's a marketplace, but providing more than one price feed for all the things, right? That gives traders something to do. It gives them an opportunity, right? And I think that's something that HBAR space needs desperately, in addition to volume and TVL. But you know, we can't put the cart before the horse. We need people. We need a reason for people to be here, and then they will generate volume and TVL. So with the token launch, and Perma mentioned it, but liquidity is our biggest focus. Establishing significant liquidity at launch for various reasons, to protect the token, to get some exposure outside of the space. People see big numbers, they like that. But build from large liquidity base, establish some more trust, and then move into rolling out all the features. And the last year of the grassroots effort, that was the same thing. We don't want to do pre-sale. I'm allergic to those. They make me shake. So we wanted to launch the product first, put it in people's hands, reward people, and then, you know, build with the community in public. And then when the time is right, launch the token, give the public an opportunity to get in early on the token, make some gains, you know. And for the past year, we've been rewarding all liquidity providers with a whole slew of token, and including all the HBAR fees that were produced. They go back to providers, but we've also been giving providers, traders, any proof of work or proof of stake users of the DEX, they've been earning Fabric points. So at TGE, shortly after that, there will be a claim button. Folks can head on over to SilkSuite, click the claim button, and exchange their Fabric points for Silk token. So one more way to reward all of the community that's been with us for this last year. So we started from zero. Over the last year, TVLs range from 2.5 million to about 4.5 million, which equates to about 35 million HBAR. So we're really proud of what we've done, and you know, the next step is to raise some capital, put that capital into marketing, put that capital into liquidity, put that capital into cross-chain expansion. And that's not just for swaps, but that's for exposure, right? And that's why we're super excited to have Fat Boy with us. He's got a cross-chain presence. You know, the future isn't competing in a sort of cutthroat way in Hedera. It's competing in a healthy way and then expanding everyone's tool sets, you know, across the whole chains.
Yeah, I think it's so important. A couple of things that you said, you know, creating opportunities for users to do different things. Like I agree with you. I think the main you know, applications right now that people use have done an incredibly well job. Some of them very grassroots. I know Centex and the Centex team has done a crazy job with Patricia and how much, you know, she's worked. But when you think about what users can do across different platforms, it's like right now I know people are kind of just like, if they're buying something, it's like they're buying and just holding it and being like, I hope more people come to Hedera.
Yeah.
Hope more people come over here soon. I think it's going to be, you know, interesting. And I know Fat Boy, you know, mentioned it. I won't talk about what he asked, but like different ecosystems, you know, contacts for different ecosystems to branch out and try to, you know, get onto podcasts and talk to different people. Because at the end of the day, and I did see, and I'll probably mispronounce it, Asta or whatever it is. I saw that everywhere. Granted, if you've been around crypto for a handful of years, you know that you're being, you know, marketed to. It's like passive aggressive marketing whenever people aren't saying, hey, I was paid to make this post, but I'm making it. But still, it was impressive because, you know, you want stuff that breaks out of the algorithm, because every single one of us and every single person watching this has their own algorithm on X, and it's exactly what they are used to. But you have to have stuff that breaks out. And I think the best way to probably do that is not even talk about the network. Don't even talk about Hedera, but just talk about what you're building and why you should join into it, and then make the user onboarding as easy as possible. All right, let's do some closing statements, guys. We got 2 minutes for everybody up here today. I'm going to start with Fat Boy, then go to Permable and Houdini, 30 or 45 seconds each. Closing statements. What are you looking forward to most? What should people expect? And I'll go with you, Fat Boy, first.
Yeah, I'm looking forward to just you know, it's not very often you get asked to come and work for an exchange for a DEX. I mean, there's not a lot of DEX. I mean, there's a lot of DEXs, but there's not a lot of DEXs out there. So this was an exciting opportunity to come work on a DEX, and you know, I just hope we can, like you said, cross chain, bring as many people in, and yeah, I don't tell people about the tech about Hedera. I just tell them about, you know, this is a good product. You know, and I think that's what we need to do, is speak about the products. Nobody cares about TPS. Like, it's not sexy. Like, nobody cares about that. They want to know about how could they make money? How does this better their experience in Web3?
Yep, I agree. Permable, closing thoughts.
Just quickly, in terms of Fat Boy, he's a marketing lead. He didn't really explain what he does, but he understands Web3 marketing, understands how it works. Anyway, in terms of the future, I'm just excited to build. There's going to be a lot of things coming for Silk, and within the next few months, Q1, Q2, we're going to have a lot of things coming out, different products, different innovations, and it's exciting.
Awesome. Houdini?
Yeah, I'm excited. So for the last year or so, it's been beg, borrow, and steal and scratch and you know, figure it out. And look what we've been able to accomplish. It's been very exciting. So once there's some liquidity, and a lot of doors open for us, you know, and the doors are built, they're there, and it's just walking through them over the next 2 quarters. Very excited.
Phil, any closing thoughts with the SilkSuite?
Yeah, really happy, man. There's never been a better time to be crafting a product outside of the ecosystem and outside, of course, the tools, and not even mentioning Hedera, because we're arriving at a point where the mindshare has matured. We got experience, and the boys, they're really OG, so they know. Yeah, that's bullish. I love it.
I guess my closing thought here, and before I let you guys go, is that I do feel like, and again, this is not financial advice from my stance, but I do feel like it seems like Hedera is one of, let's say, maybe a couple of dozen max ecosystems that seems like it has gone across the line where it's going to be here. And there's a lot of real world adoption going on. But just like I make this, kind of the, I compare it almost even to like XRPL in a way, because the communities are kind of similar. Whereas XRPL didn't really have DeFi for like years. And I feel like Hedera obviously has DeFi, but it's so early that I look at this as being a massive opportunity to onboard people. And that's, DeFi is just one example, probably among many. So anyways, for those that are watching, I want to make sure, give SilkSuite at SilkSuite DEX a follow. You can go learn more about what they're doing at SilkSuite.app. And thank you to Fatboy, Houdini, and Permable. I'm going to rotate you guys down and bring Ken Anderson up from Tashi. We're going to be talking about real world applications, but thank you guys from SilkSuite for joining today.
Thank you, Solomon. Have a good one, man.
Thank you. Have a good day.
All righty. Well, here we are once again. It's been a while, Ken. I have to.
Yeah.
We were talking about some of the old school builders on Hedera, and I just remember, you've been doing podcasting in Hedera and building for years as well, and it's always great to kind of, be able to revisit and try to figure out, hey, what's going on right now? Because I know Tashi's been kind of what you've been working on for a long time, and I would love to open it up with. Can you give us kind of a breakdown of what you're building with Tashi? And I guess the question I have is, what's a real world application in comparison to a real world asset?
Yeah, well, funny enough, I was going to try to co-opt that RWA term and use it for things like real world applications, real world agents, real world autonomy. So I was gonna co-opt that and be like, RWA means more than just real world assets. But yeah, I mean, for those who don't know, I was one of the founding employees of Hedera. So I was the chief developer advocate. My job was recruiting council members. And so I spent a lot of time sitting in rooms with multi-billion-dollar companies explaining the value proposition of blockchain in general and helping them understand where use cases fit. So I've seen just about every enterprise use case for decentralized technology. And keep in mind, back in the days, we kind of internally did not say blockchain very frequently. We always said DLT, and now it's kind of become synonymous. So, but that's where this all started. Is I got to see these applications, these use cases that these enterprises are trying to build, and in some cases, they still weren't able to build it because of the cost and speed. Like, there are just so many things that really require like a real-time time scale, right? They need sub 100 millisecond or sub 1 second finality. And so at some point, I took some time off after we had gotten the council to a certain point. I think we had hit like 26 council members when I had stepped away. And I walked away and I was like, is there something I can do with this hash graph algorithm? Like, this thing's brilliant. And on a public ledger, there's a lot of overhead with the public ledger that you have to maintain. Things like account public keys and account balances and crypto balances and all this logic that has to be stored in a public ledger that has to be distributed around the world. What if we didn't have those limitations? Could there be something cool we can do with this hash graph algorithm? So I brought together some friends, put together some funding, and we rewrote the hash graph algorithm in Rust, and we hyper-tuned it for low latency. And our first use case we built, we were getting down to like 20 milliseconds of latency on finality. And we ended up changing the virtual voting algorithm a little bit. If you're familiar with how Hashgraph works, there's the gossip about gossip phase, then there's the virtual voting phase. We added multicasting to gossip about gossip, which I think is part of the consideration for what we can do with Hedera right now. But then we jumped into the virtual voting phase, and we made some changes to that as well that are really focused on latency, low latency. And so when we were doing those 20 millisecond latencies, we were going, well, who can use 20 millisecond synchronization time? And the first place we looked at was gaming. We were like, could we build multiplayer games with no servers? But as we started to solve that problem, we were like, oh, this applies to robotics too. Like, what if you had hive clustered swarms of robots that could self-coordinate and self-manage each other and validate each other, owned by different people? And one of the use cases I bring up is, in California, we deal with forest fires. And I've talked to lawmakers and regulators. I'm actually talking to one of the regulators that regulates crypto for all of California. And we were talking about how do we allow this type of innovation without stifling it because of the crypto angle. And one of the use cases we're talking about is like, what if we had a bunch of robot lawnmowers that are owned by homeowners that are, for the most time, mowing your lawns? But if ever Cal Fire's like, hey, we need to go cut a fire line, they could provision a bunch of home-owned robot lawnmowers to drive in the bike lane, like this line of robots driving in the bike lane to wherever the fire line needs to get cut. It cuts the fire line, and then the robots turn around and drive back home. And they park themselves back in their little bay in their front yard. And the homeowners get compensated for that. Well, the robots don't know each other. And you could say, let's have a centralized server to manage that. But what happens when they get too far where they don't have connectivity? What happens when robots either they're in a space where they can't get connectivity, or there's just too many of them to be managed by a call control plane, right? There's all kinds of capacity, call control plane capacity issues as well. So he said, well, what if we could give all of the robots a mission? They could validate that mission between each other using cryptography and signatures. Then they can, what I call, scan, plan, and execute. So they scan the environment, they plan between themselves what they're going to do, they agree to that plan, and then they execute. And the robots could just do that. And then whoever has internet connectivity periodically uploads a state proof of the state of that job. So that's what I would call a real world application, is fire prevention using robo lawnmowers, which, by the way, is a thing. Like,
yeah,
GeoNet's working on this right now, and we're partnered with GeoNet on how to do that type of stuff. So anyway, that's.
So I think this is, I definitely want to get into, because I know we have such a short amount of time today, so I have like 10 minutes. But I want to ask you, in alignment with what you just talked about, one of the most fascinating things with, like, I believe that blockchain distributed ledger, at some point, it's kind of just a matter of time, is going to like fundamentally change the fabric of pretty much everything, how we live, blah, blah, blah. And it's going to take us a while to get there. But one of the most fascinating things in that is I think that you're going to see processes like totally reinvented, like streamlined, and probably new business models spinning out of the back of that we don't even know about yet. And it's almost like it's hard to measure the value there because it's all intangible, because it's like you don't know until you streamline a process, or you have kind of this, these smart processes, and you're leveraging data in different ways, what the value drivers are, or what business models spin up. What's your thought, like just general thoughts, like especially with what you're building here, about kind of what the future looks like with all of these different technologies converging with distributed ledger and artificial intelligence? And because for any of us that have worked in traditional businesses, like I was a project manager for a decade, you use these ERP systems that have been around for like 50 years that don't talk to each other. And then different companies don't use the same systems. But eventually, I think we're headed towards a society where everything is probably going to be streamlined, like all processes get kind of streamlined. It's just, I don't know. I have heard the term that we're almost at this Cambrian explosion of humanity. Do you believe that, or how far away do you think we are from something like that?
Yeah, I think we're close to it. I think hardware is getting to the point where we can support some functions that were fundamental to that vision that have not been possible before. So For example, right now, a lot of what we do is in the software layer. All the consensus stuff we do is in the software layer, which effectively means that you're emulating what could be done at the hardware layer. And that's for a good purpose, right? That's for a good cause. When we write software, we want the flexibility to solve different problems. But we're kind of getting to that point, like with AI chips, for example. There are FPGAs and ASICs that people have built for specific purposes. We know of ASICs and FPGAs because of crypto mining, right? I think that's why they've become more popular, is because we've now taken this massive cryptography domain and narrowed it down to a very specific use case, which is mining crypto. And we built chips that did that really well. So it doesn't make a lot of sense to mine with GPUs as much anymore if you can go buy a cheaper ASIC that can do more hashing power. I think we're going to see that a lot because there are certain models of AI that have been built on GPUs that are now being baked into chips. So like visual recognition models that were originally you had to run on $10,000 GPUs, you can now build a $5 chip and put it into your car that can now do AI-based visual recognition. We're going to see a lot of purpose-specific chips for AI models being implemented nearer the edge. And now we have to coordinate those efforts. And that's where Tashi comes in, is how do we coordinate those efforts in a real world, real-time way? We can't be talking in seconds. We have to be talking in milliseconds. We can't be talking in even pennies or tenths of a penny or hundreds of a penny per transaction. We have to be talking the cost of your electricity is the cost. And so
go ahead. Finish your thought, please. I
was going to paint a picture that kind of blends all of the hot topics of the world together, like robotics, AI, DePIN, decentralized physical infrastructure, which I think is a great model for what we can expect to come next. But imagine a house where you have like a Neo robot, and this Neo robot does a bunch of tasks in your house, but the Neo robot never calls home. It only talks to a box that you have in your house. And this box is a smart box, has sufficient capacity to do AI jobs, has coordination capacity to coordinate all the robots in your house, and it acts as your personal hub on the edge for every other use case that you want to interact with somebody else. So somebody else who has the same type of box or a similar compatible box can now create a tunnel, private tunnel. You can think of like how IPsec works or VPNs work. You can create a private VPN between you and somebody else with one click on these boxes, and now you can share files. So now you've got shared file storage across these boxes that is private and secure to the two parties. So not only do I have this box that controls my whole house, and I can do things like perform AI training tasks on things that are happening in my house, generating layers on the new AI model that I can take the layers, the trained layers, not the underlying data, but the output layers that come from training these models in my house. I can take those and sell those out to AI training companies or robotics companies who then can implement those or synthesize those into their grander model that then gets pushed out as an update to everybody's boxes. So now we've got privacy preserving. We're breaking down the walls of the internet. We're taking servers out of the equation. We're saying, no, everybody effectively has a server in their home. Our job is allow you to preserve your privacy and opt into synchronization with whoever you want to synchronize with. And everything in your house is controlled by that box. And only the metadata or even only the outcome of the learning gets shared outside of your house, not the data itself. That's the vision I see.
I think it's crazy because you mentioned like, our actions or what we do, I think is going to contribute to our own ability to be incentive, like to be paid basically. I think we are headed towards that future where even from a data standpoint, I know that we talk about real world assets all the time. I think our data is a real world asset that we just, it's not considered yet because again, it's kind of
100%.
It's not really intangible because the platforms that we're using know that it's very tangible. But for us, it's kind of intangible because we don't see the kickback. And I think eventually we do see the kickback. I don't want to go too far down the rabbit hole. What's coming up next for Tashi? What are you most excited about? I wanted to ask you a scalability question. Let me ask that real quick because I'm going to be mad if I don't get to ask it. I think I remember back in, so you mentioned kind of this mesh net and just extremely low latency and speed and all of the, the kind of techie stuff that most retail, I think in the future won't need to know, but for mass adoption of like blockchain and DLT, I think it's very important. I remember finding a document all the way back in 2020, 2021 about kind of research being done for smart grids and Hedera. And I even remember some of the TPS or transactions per second, like scalability numbers thrown around. What are your thoughts about, like, I feel like in the future, you know, we could be seeing like the sharding and stuff like that that was promised kind of at the onset of Hedera. It seems like it's kind of not. I think the explanation I got from Christian Hasker when I interviewed him in 2020 was, why would we push a network to be able to scale, you know, which it can, to that level if it's not, if the usage isn't demanding it at that point in time.
Yeah.
So like, but do you think we are going to head towards that? Because it seems like from a like the big kicker with Hedera and a lot of what's being used is HCS and consensus and timestamping, and it's just pushing tons of transactions, which we saw through Atma.io. I mean, the number can get very big if you onboard multiple entities.
Yeah. Yeah. Well, I think that's the prudent thing to do, is we scale with demand. That's the prudent thing to always do. So I agree with that sentiment. And as we get closer to that requirement of demand, then it becomes incumbent on us to scale that. Now, I remember sitting with Lehman at our very first company offsite in Texas, and they had rented this big house, and the whole team came and lived in the house for a few days, and we had these big meetings and stuff. And I'm sitting there at breakfast with Lehman, and I'm saying, "What is your vision for Hashgraph? Like, where does this go?" And he shared with me this really cool vision. He said, I imagine a world where there are layers of Hashgraphs. It's not just horizontal scaling that you would get with sharding, which is important, but it's also that there are layers of Hashgraphs that are each talking through state proofs to each other. So this idea that, and I've kind of coined the term recently, hierarchical economic coordination layers. So it makes the acronym HECKN, which is a great Doggo language swear word.
That's awesome.
It's heckin' cool. It's heckin' awesome. But the idea is that Tashi is kind of the edge level implementation of that. The idea that I can build a mesh net, which is effectively a limited participant hash graph. We can have a 6-player game or a 16 robot coordination problem, and they're just creating an ephemeral hash graph or an ephemeral mesh net for the job's duration. And when it's done, they pass state proofs wherever it needs to go, and then it dissolves. It's gone. It's just a temporary ephemeral mesh net. And you can have layers of this, right? You can have controllers who also have mesh nets between them and these job-specific mesh nets that solve problems, and then pass that up. And then those can get passed up to hash spheres for industries or for private verticals or for enterprises. And then those proofs can be passed up to Hashgraph and its shards for public settlement and public signaling, right? So there's these multiple layers of coordination that happen. And that's what we're doing right now. That's effectively what we're doing, is solving all the problems at the edge and letting Hashgraph solve everything at the cloud level, if you will. If you want to call it a decentralized cloud level.
It sounds a lot like, and I've even seen this recently, like we've started to, see, I mean, I'll even bring up yesterday or a couple of days ago, there's a research report that was in part supported by Ripple's UBRI, which is a university blockchain research initiative that they have. And it was talking about scaling node-to-node communication on the XRPL because there's a lot of redundancy right now.
Yeah.
And I think when you mention kind of dissolving this instance, like once this process is done, it's like, why is it kind of existing forever, taking up bandwidth on a network and doing X, Y, and Z things? It's like, let's just dissolve it. And then you can still leverage the data in ways that you need to leverage the data. But it's like, let's really kind of streamline this stuff and remove a lot of like the float that doesn't need to be there. It's really exciting where we're going. I'm rambling now. So Ken, what's coming up in the near future for Tashi? And this has been fascinating. I think we're probably going to have to line up and do like a full interview here with you, because I don't think we've done that yet. And I think I don't think Phil would mind joining. I'm sure HashPack would.
Yeah, with pleasure. Yeah.
So, but what's coming up next for Tashi? I know that you guys are, and again, not financial advice from our end, but I know I'm starting to see a lot of builders that have been here for a while, like years, starting to kind of, get ready to go live with some of their things here. Talk to us about it.
Yeah, so as you can see on that post on X there, we have our December 2nd launch pool. We're doing that with Metaplex. And then on December 4th, we have our TGE. And between now and then, we're doing our season 1 of our missions program. So at the end of December, we'll do our airdrop coming out of the missions program, where people can earn XP for helping us with testing. And they're going to get rewarded with Tashi. We have a budget set aside to pay real Tashi to people who are helping us with testing our network. And then at TGE, we'll go into season 2. So people who are helping us with testing in that phase as well will qualify for season 2 of the airdrops. And so, yeah, so the big 2 are December 2nd and December 4th. Those are the days to remember. December 2nd is the launch pool. It's kind of like a pre-buy opportunity, but it's a very short period of time. And you get some cool terms on that. And then TGE's on December 4th when everything kind of goes public.
So just briefly, because I know I didn't ask, and I probably should have allocated more time for this. What is Tashi, the token? What is the role within the ecosystem? As much as maybe you can, talk about.
Yeah, I mean, it's pretty straightforward. Tashi has 2 roles. One, it acts as a multiplier against your reputation on your nodes. So the more Tashi you have, you're basically putting collateral against your nodes, which improves your reputation factor, which increases your likelihood of being selected for jobs. We have real revenue coming in the top, and we distribute that revenue to those who complete jobs. And you're more likely to get selected for a job if you have a higher reputation, which means that you're doing the work without failing. And whatever staking you have as a multiplier against that. There's some math around that, so it's not it's not controlled by whales, right? It's not there's opportunities for even new people to participate as node operators. The other thing is it's a slashing tool, so it prevents bad actors in our network. So it acts as a security mechanism to prevent people who have faulty or malicious hardware participating in the network. So yeah, that's exactly right, is running the infrastructure layer. So it has a kind of a twofold function. One, it prevents bad actors, and 2, it helps and plays a part as the selection algorithm. And then there's a whole bunch of economics around it that's helpful for, but that's the core functionality of the Tashi token. We need something of value to secure the network.
Yeah,
to put up as collateral to secure the network.
Awesome. Well, hey, Ken, I think we definitely appreciate your time today. I want to mention for those watching, and we definitely, I think we need to do a kind of fuller interview, because I think you and I could probably talk about multiple things. Make sure you give Tashi Network a follow at Tashi Protocol, and you can check out, there's a lot of documentation on Tashi.network as well. And it's cool to see an OG in the space and in Hedera getting ready to launch. So awesome.
Yeah.
I'm excited. So let's do this again, Ken, in the near future. Thank you so much for joining today.
Absolutely. I'm here
Hey,
for
cheers,
it.
Ken. It was really nice seeing you. Cheers.
We're going to bring up YieldFX, and let's do an audio check, since we're doing everything shotgunned and live today. How are you doing today?
Hey, Ryan, how are you?
Good.
Hey, Rajiv.
Hey.
So I know, Rajiv, you reached out to Phil from HashPack, and again, I'll give a huge shout out to HashPack here before we get started. And we've done probably hundreds of these interviews at this point in time, but I'm always interested in interviewing new people coming to the Hedera network and just kind of the wider blockchain space. So can you give us an overview of what YieldFX is bringing to blockchain, to the Hedera ecosystem, just kind of broadly? And yeah, thank you for joining today.
Yeah, thanks, Ryan. It's a pleasure to be here. So just a brief background. I've been involved with the Hedera space for a while now. We were, in fact, involved with the initial protocol development a few years ago in 2017, and have maintained the relationship since then. So not new to Hedera, but it's always exciting to be here. In terms of what we're doing, I'm currently working on YieldFX. YieldFX is a global yield platform that allows users in different parts of the world to invest in and trade tokenized foreign currency deposits as easily as they would, for example, trade stocks on an app like Robinhood, right? You could be sitting in the US earning 3.5% on the dollar, which you can instantly move to, say, the Mexican peso or the Indian rupee, and earn 9 or 10% yield. Unlike traditional bank deposits, our deposits are no lock-ins or minimums. You see your money grow on a daily basis. And the other advantage that we have is that you can also trade these in real time on Flex, which is our decentralized exchange, with very low fees and spreads compared to what you would get in the market on the retail side, right? And this is crucial. So if you think about foreign currency investing or benefiting from differential interest rates offered in different countries, currencies, the challenge that retail investors face is that the spreads are so high that any benefit you get from the currency interest difference, you lose on the cost of the transaction itself. So with Flex, we are able to reduce that spread drastically and make foreign currency investments viable for retail investors.
I think it's really interesting. And I don't think we've done maybe an interview on tokenized foreign currency deposits before. When you look across kind of the blockchain and distributed ledger landscape, do you guys see a lot of competition in what you're doing right now? Because I literally, when I say that I haven't heard this before, I'm sure some of this exists, but I've done a few hundred interviews. I certainly haven't heard this before on Hedera. But do you guys see competition, or what's the market opportunity here, I guess, for you guys?
So we don't see any direct competition at the moment. There has been talk has started about tokenizing traditional bank deposits. The difference in terms of how the deposits get tokenized is that unlike a stable coin, say USDC or USDT, which has a sponsor, our deposits are actually managed by regulated banks in different parts of the world. If you onboard with us, even though your deposits are tokenized, we also tokenize what we say is your global banking identity and the account itself. So using those layers, we're able to model the traditional bank deposit in a tokenized format versus creating a pool of money managing it like a stable coin, right? So this is a unique approach. The benefit that you get from here is the lower risk. Because your deposits are held by a bank, you get the benefit of the insurance, the FDIC insurance, for example, the assurance you get from being with a bank. And also, your on and off ramps are native. You don't really need an on or off ramp, which is still a problem for USDC and USDT, right?
Yeah. I think it's interesting because, and I've seen this, and this might be, I don't know if it's off topic, but I remember a handful of years ago, doing some deep dives and then doing videos, and the big talk was obviously CBDC, central bank digital currency, and then that shifted into stable coins. Very much so right now, the past 12 to 18 months, we've seen a huge amount of talk on stable coin adoption. But quietly doing the same research through the banking industry and stuff, I'm starting to see that like the next iteration of where stable coins head is tokenized bank deposits, because it seems like the banking industry is maybe more comfortable with that in the future, which might be 3-4 years down the line here. But I would expand maybe a little bit more on, I guess, what you see as kind of an opportunity to bring this to the Hedera ecosystem and how this is going to kind of benefit Hedera as a network, and maybe just the broader blockchain space as well.
Yeah, absolutely. Right. So if you our big value proposition, right, if you look at it, is for banks, where banks are struggling to attract deposits, right? They have additional yield-bearing products, investment platforms. So it's very difficult for them to compete with the newer age products. So we go to banks and say, look, we're going to package the oldest banking product in the world, which is the deposit product. Using DLT, we're going to make it globally accessible and more marketable and appealing. So they're very interested in this, right? The opportunity itself is huge. As a population, we are all becoming increasingly global. We have interests in different parts of the world, right? We travel abroad, we work, study abroad, and access to foreign currency accounts and currency deposits is still a big challenge for almost every diaspora community. So that is a low-hanging fruit where we believe that we can enable that access very easily. For example, just the Indian diaspora sitting in the US holds about $175 billion of Indian rupee deposits, which earn almost zero interest. Right? So that's a very, very low-hanging fruit that we're trying to target initially, right? That expands to other currencies and other diaspora populations as well. But beyond that, if you look at the FX trade and you look at the carry trade, where you're able to leverage different currency yields, is restricted to large financial institutions. It's never been available to the retail investors. our big push is to make this available to retail investors. They're highly lucrative, but they just can't be accessed, right? So that's our big push. The advantage we get for Hedera obviously is both in terms of the adoption of the platform. We are working with regulated banking partners. So in essence, if they work with us, they're getting onboarded on Hedera, which is the institutional side of things, right? Can Hedera be used for real institutional products? The other thing is there are a lot of pilots that happen for almost everything, right? In the DLT space.
Sure.
We are not a pilot. We are a mainstream product, right? That's again a very big difference. We are actually taking a mainstream financial product on chain in a, to its completion, right? If you may, like it's fully tokenized. There is no other element. This is not some small aspect of the product itself. So I think that's going to be of value once people see that yes, there is a live institutional product that is scaling well. That will attract other institutions to start participating as well.
I think it's interesting to me because, as you mentioned, like a live institutional product. What are your thoughts? Like, and maybe this is just an assumption on my end, but I think that most of blockchain distributed ledger adoption, a lot of it happens through networking. Like a lot of it happens through networking and actually integrating something that's real. So like almost as a byproduct of you guys integrating within the banking or different banks, it's almost like it removes one more door for the Hedera ecosystem, or it could remove one more door for the Hedera ecosystem to walk through, because there's almost like already a relationship there as far as what you guys are doing. And that, can you maybe talk a little bit, since you guys are working with the banks, when you talk about what's going on with the technology, I guess, is it, are the conversations that you're having different than maybe a few years ago? Are banks aware of what's going on with blockchain and distributed ledger? Is it easier to have those discussions at this point in time?
So it is, it is easier to a certain extent, but part of the reason is because the way we are approaching the product, right? When we design a product, we stay as close to a traditional banking product versus trying to be very disruptive and saying, look, we're going to create our own, we're going to manage the funds, and we're going to all those sort of things. So the banks have been very open. And I think this approach actually works better, because instead of creating a very drastically different product, we are going with something that is close to them, and we are positioning the decentralized component as a technology element, as a technology layer, something that the CTO needs to discuss versus what the business needs to discuss, right? So what does DLT offer for them? Obviously being on Hedera, it offers the efficiency, the scalability, and global reach, right? So you can access a global audience all of a sudden, which obviously has benefits, but without actually increasing their risk, right? Banks always worry about risk, and we have to understand that if we go pitch a product to a bank, we actually have to appreciate what they do from a regulatory basis, what their compliance requirements are, and where they see the risk, right? And try to address those. So we've been quite successful at that. We haven't had any concern. And you're right. Once we do open the door, because we are primarily a fintech platform, we don't tokenize the deposits. The deposits are actually tokenized on banks' instructions. So they get this baby step into being on the chain, right? And that can be followed up with a multitude of financial products. Talk about lending and other things that can just follow on from what we do, right?
Well, I would love to, if you could maybe talk about the state of the platform right now. I know that you mentioned a lot of, and this is 100% true. A lot of like real institutional or enterprise adoption of crypto, blockchain, DLT starts with, sometimes years of proof of concepts, like years and years of proof of concepts that sometimes we don't see the fruit of those labors until like 4 or 5 years down the line. And it's like another proof of concept that's announced. But from your guys' end, talk about where you guys are at with YieldFX, what type of adoption you guys have right now, the state of the platform, where can users maybe go to learn more and participate, kind of all of that.
Absolutely. So we are not live yet. We are going to go live in Q1 or early Q2 of 2026 with two currencies, the US dollar and the Indian rupee. That's our initial starting pairing. We need to start somewhere small, and we have captive audiences in both those things through some channels that we've created. So that's where the platform is. From a technology standpoint, we have made a lot of progress. We are live. We have a beta app that operates in simulation mode, which people can try out. We will be launching a trading contest on the 15th, where we are giving away our YFX tokens as rewards. I'll talk about that in a bit more. And people will be able to literally, over the course of, say, 30 days, try FX trading strategies, right? See or discover the potential of what FX trading can do. We did a small test a few months ago with some college campus fintech clubs, right, including Harvard. And the returns that the students were able to generate over 30 days analyzed were over 25%, right?
Wow.
And this is purely risk-free trading of currency deposits. So there's a lot of potential there to be discovered. Beyond that, we will be launching our token, which is the YFX token, early Q2 as well. This is critical for our exchange. Our exchange Flex is unique. You know, it follows a hybrid market making model where it can combine on-chain and off-chain liquidity. So because the FX markets are so huge, you can never be successful if you just try to do it on-chain, right? So we have an off-chain element. The challenge with off-chain liquidity, for example, if a partner like Moneycorp gives us a quote, how do we execute on-chain? For that, we borrow from our own depositors, right? And that gives them an additional yield opportunity, but we need a token to pay for that borrowing in multiple currencies. So that's where the YFX token comes in. It's primarily a utility token used to pay for fees, used to pay for liquidity borrowing and other interactions on chain. So that goes live in in Q1. We're still trying to figure out what jurisdiction we want to be under for that. But for the contest, we will be giving out claim tokens, which will be convertible one-to-one with the YFX tokens when they're launched.
Awesome. I'm more, as we close out here, I want to kind of get maybe big picture too. And you mentioned that you've been in the space for a while, contributed to some of the building of the architecture of the Hedera ecosystem. What are your thoughts? I mean, I probably should have asked Ken this, who was just on right before you. But what are your thoughts just on the state of adoption for blockchain and distributed ledger? It seems like, I've been in this space since probably late 2016, and it seems like the past 12 to 18 months, from an adoption standpoint, almost every day, there's multiple pieces of news that come out that would have driven an entire narrative for 6 months or a year, 5 years ago. What are your thoughts just on the state of adoption, where you think blockchain and distributed ledger are heading? And yeah, thank you so much for joining today.
Yeah. So in terms of adoption, I mean, obviously adoption is increasing. We see that every day, right? I'm still concerned that a lot of these projects never get off the ground, really. They tend to be at the POC stage, at a discussion stage for years, but nothing real is happening. Very few people are taking products that can be launched effectively in the short term, right? It's a different type of product, right? I mean, if you're going to start tokenizing Amazon forests and talk about those sort of things, then it's a difficult ask. I think it's important to start small, start with real use cases, and again, based on the network, see what the value is. On Hedera, the token service is very underappreciated, right? It is tremendous potential. I mean, you can look at a number of use cases that could be built on top. We are built on top of that. So I believe that if we can get the right use cases, then we can focus on launching products versus POCs. I mean,
yeah,
that is going to be very, very different, right? I don't want to do anything on DLT which is going to remain a POC for years. It's just a waste of time.
Well, I think what we, hopefully what we start to see is real business models that generate revenue. I mean, that's like if you're generating revenue and you launch, this is probably one of the reasons why Genfinity hasn't launched a token or NFT for like ever. Like every time we've had the discussion, I'm just like, no, I'd rather just do interviews. But I think we are starting to see more of kind of that. Yeah, let's leverage the technology, but we are creating a real world kind of business, which, this interview is probably a good example of that as well. Anyways, Phil, I wanted to tell you, thank you so much for inviting Rajiv with us today. And
I love what YF is doing. Yeah. They're awesome. Yeah. I think it serves a niche that's really underexplored in Hedera. And that's use case that people have been wanting for the last 2 years. So yeah, big shout out to you guys for coming on and of course, like reaching out to us. And that's really good. Really looking forward also to the trading contest. That's going to be awesome.
I want to ask real quick because I think it's an interesting question, and I just thought of it. As you have kind of these tokenized bank deposits on the network, like one question I have is like, it seems like in the future, there's going to be all sorts of tokenized real world assets, and there's going to be all sorts of relationships between those tokenized real world assets, whether it be a bank deposit or whether it be a portion of a house or a portion of whatever.
Mhm.
What are your thoughts? Like, you know, and I know that this isn't something that you guys are inherently building, but it might just happen, of the ways that different tokenized assets are going to have relationships with each other in the future, whether it be through new products, or this is maybe just a broader speculative question. But do you think that that's going to happen in the future? We're going to see different relationships between tokenized real world assets kind of naturally?
Well, absolutely. And we're depending on that, right? So, for example, we talk about we're creating a tokenized deposit. It's ideal to be used for, say, an escrow account where you're trying to buy a house, right? Or a rent deposit, if you may. So you will see, and you could have a rental deposit contract on chain. So you're going to see all of these things intersect. It's just going to take time because initially when we launch, we'll have to put some guardrails because of the banking relationship. They say, hey,
Sure.
we don't want them. But as the guardrails are slowly removed, I believe that all of these things will develop on chain and it'll be a whole new ecosystem, right?
100%. Well, I want to mention to everybody, make sure you go and give at YieldFX a follow on X. You can trial out the demo application here. You can go to yieldfx.co to learn how it works. You can go to yieldfx.co/flex TAC exchange too and learn more there. That being said, I wanted to mention again, SilkSuite, thank you so much. Ken Anderson from Tashi, Rajiv from YieldFX, and a huge shout out once again to HashPack, who are Genfinity's kind of long-term collaborators for sponsoring this podcast, among with probably the hundreds of others that we've done. And yeah, that being said, hang out with me here for a second, gentlemen, as I ramp this down to make sure I get our recordings. And thank you so much for joining today, Rajiv and Phil.
Thank you.